the first round of stimulus checks that happened almost a year ago. So that's going to be a good thing to have more volatility, more liquidity in the market. But it's not going to necessarily be the thing to sustain the market. It's going to be looking for other factors. But I certainly welcome more investors because for many, many years, a lot of the millennial generation were actually not into trading Wall Street and the stock market, looking at it as something that they felt was rigged or fixed. So the fact that that philosophy has switched to more amenable to actually investing in trading is great. And of course, there'll be people who will lose all their money, and then there'll be people who make a lot of money and people who sort of fall in the middle and decide they like investing and will try to get some level of an education. We've seen turbulence created in the market from the retail investors in the Reddit stocks like GameStop and AMC and COS and a few others. So that's where we've seen the turbulence. In terms of the overall market, it depends on what instrument is being traded. If there's something with a tremendous amount of volume, say one of the big tech stocks or one of the more popular Dow stocks, there's not going to be able to create turbulence in those markets because they are so heavily traded by so many different types. And as you know, for every buyer, there's a seller. But when you're talking about short squeezes like we've seen, or we've talked about things that have very low volume and not a lot of liquidity, yes, retail investors coming in could actually move that market. But we also know that you can only move things for so long, and then eventually everything gets back to some level of normalcy. So I think of it only as a good thing. And of course, one has to be prepared for any type of adjustment it makes, even if it's just temporary. Obviously, we're coming back from the pandemic, and there's that first spurt of growth. But once we get to 100% normal, what's going to take us beyond? And so maybe the Goldman Sachs prospects are based on an infrastructure package. That, I think, would be the number one place where we could look at some kind of growth expansion. Maybe the fact that there won't be any trade war with China will increase trade globally and also in Asia, which was stymied a bit. So it's a wonderful thing to hear that level of optimism, but it sounds just like the same type of hyperbole we hear when we hear that the market is going to crash and that the economy is going into depression. I take it sort of in the same vein. So maybe somewhere we'll meet in the middle. The major themes that they're talking about that I've read about is climate change. So that's something that's been going on for a while. Will something permanent come out of that? Well, I don't believe that there'll be anything necessarily new other than the ability to look at solar and wind stocks and the fact that we're going more green. But the question is always going to be the distribution of all of that. How is that all going to be distributed? Because right now is not necessarily the most efficient for getting it out to the masses. Secondly, they're going to be discussing the trade situation, the trade war. And I believe that that will definitely be something that will be positive for the market, as we just spoke about, even considering the GDP growth. And they're also going to be talking about what's going on with Hong Kong. So it'll be interesting to see what comes out of that. I'm not even going to speculate on what they may come from that. And North Korea would be the other major topic. And at this point, again, it's been quiet over there, but there's always the underpinnings, as we know. So do I think it'll have any immediate impact? Not necessarily, but it certainly will go probably a long way to fixing some of the adversities that we had during the last administration with China, and President Xi will come out feeling probably a lot more positive. Well, this morning on Tuesday, we had the industrial production numbers that were very disappointing. Instead of having industrial production growth, as we've seen in the rotation into the small caps and the transportation, instead we saw a decline that was unexpected. So you're definitely going to see some comments coming from Powell that will talk about the fact that the United States economy is still relatively fragile as we come out of this pandemic. And as optimistic as he is, he's going to remain accommodative longer term. I think what the market is going to be listening for really are two major themes. Either he says it or what he doesn't say could be equally important. And there's some talk about that tied to inflation, and over 2%, it could get very dangerous for the market. Whether or not he addresses that, whether or not he talks about the potential of Operation Twist, where they actually buy back the longer-term bonds and sell the short-term bonds, that will be something the market will look for. And look for his comments on inflation, even though we already know that he doesn't feel that inflation is anything but a temporary blip if it even accomplishes. Short-term rates right now are going to be what the market's really going to be cued into the most.